Robbie, how close are you to where they probably don't know about it anywhere besides California, but Pliny the Elder, Pliny the Younger,
Oh,
isn't that a fancy beer?
As the crow flies, or on the twisting roads of Highway 1 through the forest?
Both.
I'd say as the crow flies, probably 25 miles, but on the roads, hour and a half, maybe hour 45.
Yeah.
So I'm a big beer guy, and I've heard the tales of Pliny the Elder. You can't get it here in Cleveland. And we were at our collab lab in Sonoma a couple months ago, and the dinner the one night, I just happened to see somebody across the way drinking one. The next thing you know, Jason Maddieto, one of our first members ever on our board, he ordered like 70 of them. So it's very, very good beer.
It is good beer. You're telling me the quality of life in Cleveland doesn't include Pliny the Elder?
I can't even get Ballast Point in Cleveland anymore, which is one of my favorites, California beers. So there's definitely been some impact of that. Stone and the big ones, everywhere. But the next tier, at least here, it's hard to get some of that stuff.
And Robbie, how far north of the Golden Gate Bridge are you now up Highway 1, roughly?
I'm going to say 60, 65 miles.
All right.
Happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the rundown with Rob and Rich, where we take you into the weekend by running through the week that was in the mortgage industry. As always, pleased to be joined my esteemed colleague and co-host, Rob Chrisman. Rob, great to see you.
Good to see you after your weekend of wiffle ball, right?
Yeah, we broke our own record, biggest wiffle ball tournament in America. 169 teams, had over 4,000 in attendance, and yeah, it was crazy. So I did better with the sunscreen this year, bronze but not burnt. So
ironic story, Rich. I had a couple of my wife's friends play in that tournament that I found out this week.
Yeah, we got a band, like a pretty big name cover band here in Cleveland to come play the event on Saturday for like 6 hours. And the lead singer reaches out to me like a few days in advance. He's like, I was questioning like what has happened to my career when we're playing a wiffle ball tournament. But then he said like 6 of my buddies reached out to me like, dude, I heard you're showcasing the World Series of wiffle ball. So it's a pretty funny moment. But
It's a good Cleveland cover band. Do they say we set the Cuyahoga River on fire?
Yeah.
Claim to fame?
I'm sure they have some sort of homemade song about that. But yeah, so and I'm this week joined a couple special guests this week. Back again this week, Rob's son, Robbie. Robbie, good to see you. In Chrisman fashion, showing up at a random location, but we wanted to have Robbie on this week because he just bought a house and he's actually got his keys this morning. He's in the process of going through all that and moving into a new house. So we figured we'd get a legitimate millennials view on the home buying process and procedure today. So Robbie, thanks again for joining us.
Happy to be here.
And then this week, TMC's very own SVP Business Development, Tom Gallucci. We aim through the rundown to keep people informed, to wrap up the week by letting people know what the hell is going on in the industry outside of their silos. And Tom has the benefit of working very closely, managing amongst other things, our entire preferred partner network at TMC, over 70 companies. So we wanted to get Tom on to get his perspective on just how the vendor community in general is dealing with what has been a really tough and weird business climate here in 22. So Tom, thanks for joining us.
Pleasure to be here. Thanks for calling me up.
All right, let's go ahead and get into it. Rob, big news this last week or so. Wells Fargo.
Hold on, Rich. I know where you're going with this.
Okay.
Big story, but it's not an official Wells Fargo news flash. So
You're saying the reports of Wells correspondent's death have been greatly exaggerated.
Yeah, that's not to say it won't happen. And I was surprised. I wasn't surprised. I was it was interesting how many emails I received earlier this week when that Bloomberg news story, I won't call it an opinion piece, but there was a lot of vague stuff about people familiar with the matter or rumors and so forth, or conjecture, and a lot of facts from years ago to fill out the story. But it was interesting how many people wrote to me to say, through thick or thin, Wells Fargo correspondent has always been with me. When the others were jumping ship, when Countrywide was going under, my only investor was Wells Fargo correspondent. They've been a steady Eddie. So there's a tremendous amount of support in the industry for Wells Fargo's correspondent channel. And so the story that broke was a lot of people talking about possibly changing that in the future. And I'll just, I'll finish my little mini tirade here by saying that unlike Sprout or First Guarantee or some of the other companies, like some of the non-QM companies that just bailed and sailed right out of the market back in March 2020, if Wells Fargo does indeed decide to get out of correspondent or scale it back dramatically, you can be sure that the industry will have plenty of lead time. They're not going to do it on a Friday afternoon. So my 2 cents.
I got to agree with everything there. I like the void that Wells filled in our industry after the meltdown 10, 11, 12, 13 was not only, it was critical to our industry. If I remember correctly, they got not lucky. They had some kind of subprime stuff going on. I think they sold their subprime arm like 6 or 9 months before the meltdown. Obviously saved them a lot of pain and suffering, and then filled a huge void in the industry. I would agree. My lender days did business with Wells my whole life, completely professional organization, nothing but good things to say. I remember they were up to, I think it was 33% market share at one point. That's at least these last 15, 20 years, the most anybody has seen in the industry. And the last thing I'll say is like kudos for them, honestly, for staying in mortgage banking this long, because to be in mortgage banking as a big, huge bank is a nightmare. Again, you could pull up one of 850 Jamie Dimon sound bites about how Chase is only in the mortgage industry because they have to be, really. And they don't really have to. Look at US Bank. There's other big banks. They're not really in mortgage. They are kind of, but not really. So kudos to Wells Fargo for a great run. It's not over. And I heard the same thing. There's nothing's going away with their correspondent.
Yeah. We just got a note from Anders reminding us that Wells got out of subprime some years before the crash. And I hope that Wells, if they do decide to scale back its correspondent channel, that it's not a precursor to other large banks like Chase and Citi. Citi's correspondent channel is doing very well right now, but US Bank, Chase, Citi, Wells, all the big banks in the business right now, Fifth Third to some extent, but I hope it's not a precursor to others getting out of the correspondent channel as well, because then you are left with, and nothing wrong with AmeriHome or PennyMac, but you go to a different tier of correspondent investors. And there are a lot of correspondent investors out there that, but they, I would argue that they're a little flightier than a nationwide depository bank in terms of being there for the industry. It'll be interesting.
Tom, anything you're seeing or hearing just on the correspondent lender front as it relates to M&A or pulling it out, getting in, anything of note there?
Yeah, I mean, in relation to our network, the biggest acquisition we saw recently was Planet Home acquiring Home Point and essentially doubling their client base and volume. I think, going up from number 10 or 11 in size of correspondence to probably 4 or 5 once post-acquisition. Otherwise, you're seeing kind of in the non-QM space some fears amongst lenders. If they look to go that route, will those loans come back to them if the funding source goes kaput and somebody suddenly has to shut their doors? But, pretty much what I'm hearing on my end.
Yeah.
I wanted to ask Robbie, I mean, Robbie, you work for MZT, a very, very well-known hedging company, servicing valuation, so forth. What are the ranks and file without revealing any trade secrets or MCT secrets? Is kind of the herd spooked about the Wells Fargo story, which isn't really news, it's a story, or is MCT more focused on the FHFA and Ginnie Mae seller servicer requirements that came out this week?
I had heard some chatter that players downsizing or exiting the space might actually help improve margins, which seems a little counterintuitive. But that's kind of the chatter that I had heard.
Yeah, it's a lot of hands in the cookie jar right now, to be sure. So going after the same amount of business. So, oh, go ahead, Rob.
I wanted to jump a little bit because this week I spent a lot of time in Orlando at the Florida Association of Mortgage Professionals conference, and spent a lot of time, and we're talking about the current environment, which made me jump ahead here a little bit. And I wanted to ask Tom, since your finger is on the vendor pulse, Tom, part of the business climate right now, obviously lenders are laying people off. Lenders are talking about 50% volume cut from say a year ago. What are the vendors saying? We don't talk a lot about vendors as much as we could on this show, but what are they telling you and what are you seeing?
Yeah, I mean, I think honestly, Rob, it depends on, who you're talking to. Like, if you were a tech providing vendor who was fortunate enough, say, to do a capital raise prior to June, you're feeling pretty flush about your cash position and being able to double down on new products, tech investments. I think we've seen it, maybe not as strong as we've seen it with some of these lending institutions, but certainly rounds of layoffs within the vendor community. Again, more so on the tech side too, as organizations look to right size with some projected lean years ahead. But there's also a sense of optimism out there. If you think about it, largely it's been 2 consecutive record-breaking origination volume years where lenders are just finally able to kind of come up for air and really reevaluate maybe some of the strategic plans they had from the beginning of 2020 as it relates to their vendor stack. And so, really coming back around, I think at this juncture, taking a more diligent and deliberate kind of process in establishing or evaluating the current stack in the vendor community before pulling the trigger there. But a lot of talk out there around continuing to implement automation related resources, whether it's at the loan level or process automation too. I think there's a lot of wounds from the recent cycle of hiring and firing, and lenders kind of looking to get off of the roller coaster, if you will. So definitely some sense of optimism in the vendor community.
Yeah, I'm glad. I mean, I'm hopeful. You don't want to see vendors, especially when they have a decent product, going out of business or scaling back dramatically. The story that I'm hearing from vendors down in Florida were the story was more we're getting beat up on price. We are, if we can sell a widget for $5 a widget, then our lender clients are coming back saying, well, your competitors up the street at $4.80 a widget, and you need to match it. And we love you, John, but $4.80 versus $5 a widget, we're thinking about making the move. Are you seeing or hearing that, Tom?
Yeah, absolutely. I mean, it's kind of cyclical. What the situation most of mortgage lenders are facing tends to stagger and make its way on down to the vendor community as well. It's kind of what I alluded to before, where lenders have more time now to do their diligence. There's not as much of a hair on fire issue to proceed forward with making a change in their tech stack per se. So they're going to hammer a little bit harder into the providers out there before pulling the trigger to get the best possible price out there, knowing that, 2023, the last time I checked, is not going to be a record-breaking year in origination.
Yeah.
Yeah.
I received a note. I stand corrected. When we were talking about correspondence, Rich, Tom, Robbie, my apologies, listeners, viewers, apologies. AmeriHome is actually owned by a large bank. So I
Yeah.
apologize to AmeriHome, the general counsel of AmeriHome. Please don't send that email. And I stand corrected.
And also, we would like to re-apologize to all the Democratic Californian politicians Rob insulted a couple weeks ago, just in case they missed the apology. So
What was that apology?
I'm kidding. It was you.
Oh.
It was the one week we just had to apologize for like 7 things in a row. When
Oh, I think didn't the Pope just apologize for the Crusades or something?
everybody's apologizing for everything, and right now.
See, it's never too late.
So always a second chance, except Deshaun Watson, evidently, but we'll see what he does when he gets back. So
Who's that?
he plays football. He's been in the news a little bit lately. Yeah. So
Robbie. This is where I bring in Robbie.
under Deshaun Watson talk.
He's suspended for the first 11 games of the season, which the NFL appealed the process that they told the Players Association they weren't going to appeal because they didn't like the original arbitrator's outcome.
So moving it back to mortgage for a second, we'll get back to football, but MBA, a couple releases this week, their weekly application index, the lowest mortgage demand in 20 years. And then the next day they come out with the report, only 43% of mortgage lenders or 57% were profitable in Q2. So speaks to the climate right now. Existing home sales also fell for the 6th month in a row. I never can remember that. Feb to July, 6 straight months of existing home sale declines, but obviously a weird year. But Robbie Krisman knows something we don't, because he just bought a house right now. So Robbie, you feeling confident about your home purchase? Can you tell us, did you get a mortgage? Which lender did you go through? You talk about any of that?
If you could see how far away from civilization I am, you'd think I lived under a rock. So I don't know if I know something you don't know. She thought that was funny. But I did go through the mortgage process actually with the Cleveland lender. I'd be happy to hear that.
Okay.
Well,
Based on their global domination efforts, I think I know who it might be, but
Not push button get mortgage.
okay. CCM.
No, am I allowed to divulge this?
Yeah, sure.
Down on this.
Oh, hey, Robbie, you may not be able to see the screen, but somebody's asking about how much you paid per square foot for a house anywhere near the ocean in Northern
It was
California.
about $1,000 a square foot, but it came with some acreage.
Came with a what?
Some acreage.
Like a few hundred acres.
No.
I'm thinking of Cleveland prices, like 1,000 a square foot. You get like honestly like half a city with that in land.
I think I am half the city considering the population around me.
Are you in downtown of your new city right there outside the general store?
This is as close as it gets to downtown. We got three hole gas pumps. That's pretty good. We got 2 porta potties over there off camera. So times are booming.
Robbie has a lot more tact than I would have, because I'd probably take the audience over to see the aforementioned porta potties. But it's definitely where Robbie decided to buy a place is, the north coast of California, similar to the coast of Oregon, parts of Washington, would be similar to the coast of Maine, for example. Very rocky, very isolated. People go up there. They go on vacation, places like Fort Bragg or Mendocino, or they go steelhead fishing in the winter when the weather's miserable. But it's not for it is isolated, but it's gorgeous. So there's a sacrifice, but Robbie, you had the interesting thing, I think loan officers on the call, I think would like to hear about, without getting into too many details. I don't want to ensnare you in some legal thing, but you had, was it a corporation or a partnership that was selling you the property? What did you have to go through to clear the hurdles of that?
It was a 6-person LLC and there was an uncooperative seller. And so there's a 60-day appeals period in California, which delayed my closing to, I think it was about, Mason, about 90 days total. So we had to extend the lock, which fortunately the seller paid for. But, when you think you're going to close in 30 days and it goes another 60 days, it's never fun.
So how did the lender react to that? Or was the lender just kind of shrug, keep us posted?
Well, so I originally locked in the middle of May, and that was during a big rate run up. And so it took some finagling between the loan officer and the capital markets department to figure out what they wanted to charge for the extension, if they'd honor the rate, which I didn't necessarily care about the dollar outcome at the end because the sellers paid for it, but I was able to keep my rate. And I think that was a big issue for a lot of capital markets departments at the start of the summer with extended rate locks. What do we do? Rates are up. Even still, there's a lot of volatility out there. And so these extended locks are hard to manage.
Do you think that if you weren't in the business, the customer service and the information flow from this particular lender was adequate, or how would you, what advice would you give to lenders listening in terms of when things go awry like that, being a young home buyer?
I would have felt a little lost without being in the business. I think a lot of my friends that go through the process or would have something happen like this. You're in the dark a lot of the time, and I enjoyed the process with my lender, no complaints. But I think it took me reaching out and prodding them on some things and different options we had for them to say, oh yeah, we can do that. I think a lot of young millennials just kind of take what they're offered when it comes to what the real estate agent tells them or what their LO tells them. It's like car insurance or something like that. Shop at one place, oh, it's a good enough rate, take it, head on out.
Did your realtor ever offer a lender that the realtor would recommend?
Phrase that again.
Did your realtor ever say, you should really check out ABC Mortgage because I know, Francine Smith there and she'll take good care of you? Or did the realtor know you were in the business and already had a lender?
By the time the issues with the seller arose in terms of dissolving the LLC, I was already far enough in the process with the lender that I decided to stay with them. But in home shopping out here, rural California, I was recommended some local lenders that I was told have a lot quicker turnaround times if you need a pre-approval or something like that than a national lender.
I would have been like, listen, my last name's Chrisman. My dad has a newsletter that 100,000 people read. I want 1%. I mean,
No,
come on, that's a lot of money.
Doesn't work like that.
No,
This
It
didn't
used
work
to.
like that because I wanted to work with this company for a pre-existing relationship we have with the CEO. But when I actually applied for a co-op in New York City last year, and I financed it with a private bank that I bank at, and I may have dropped I do a newsletter podcast about the mortgage industry. What can you do? What can you do for me?
Hell yeah.
Rates were a lot better then. Margins were a lot wider back then though.
That's touche. This is the Rundown with Rob and Rich. I'm Rich Sorbinsky with the Mortgage Collaborative, joined as always by Rob Chrisman. And this week, Rob's son Robbie and TMC's very own SVP Business Development, Tom Gallucci. Rob, does size matter as it relates to the Fed's increase coming up? A lot of consternation this week. The Fed minutes got released. We had a rally in all the markets, stocks, bonds. Everybody's like, all right, numbers are good. Inflation's coming down. Or all sales ahead. Let's go. And then the Fed minutes come out and you got some squirrely Fed members that, are making comments that are freaking people out. Stocks sell off today to end the week. Bonds sell off. 30-year fixed rates back up in the mid fives. Your thoughts on the latest trials and tribs with the Fed?
It's so interesting how the Federal Reserve has sucked all the air out of the room in terms of rate discussion. And it's, I think everybody on the call realizes that the Fed reacts to inflation, just like mortgage rates react to inflationary news. And so I remember when Alan Greenspan would come out with some pronouncement and the markets would dissect his paragraph or two, looking for nuances, hints, and so forth and so on. And now it seems like we've gone back to those days where, gee, a half a point, three-quarters of a point, half a point, three-quarters of a point. There's a lot of data between now and the next Fed meeting, the Federal Open Market Committee meeting. So there's a lot of ground to travel. A lot of things may happen. Who knows what we can sit here and conjecture about this, but heck, if they declare a truce, if Russia says, hey, we're going to leave Ukraine alone and backs off, or China stops rattling sabers over Taiwan, or OPEC picks up the pace of production. There's a lot of things that can happen. We've been watching gasoline prices go down, which is very nice. And maybe we've seen the worst for inflation. I don't think we're out of the woods by any stretch of the imagination, but a half, three-quarters, the Federal Reserve, as you pointed out a number of times, Rich, toward the end of last year and into early this year, the Federal Reserve was behind the eight ball in terms of really grabbing the bull by the horns. I'm going to see how many analogies I can work into a sentence here, but really they are trying to play catch up. I think the market's interpretation is that the Federal Reserve has caught up, and the fact that they are talking about another 0.75% for overnight Fed funds really it signifies that they mean business. But I think the market thinks they mean business already. So whether it's a half or three-quarters, like I say, a lot can happen between now and then. And whether it's a half or three-quarters may be inconsequential if we know the Fed is prepared to do more. And on top of that, if it's interesting, if you look at what mortgage rates have done since mid-June, they basically come down. 30-year rates are down from mid-June. And so it's a reminder that once again, A, the Federal Reserve doesn't determine 30-year mortgage rates, and B, overnight Fed funds don't determine mortgage rates. So the thinking among bond investors out there and mortgage investors is that, okay, these rate moves have already had an impact, and we're going to bring long-term rates down, and we've seen that happen. The question is, if they raise short-term rates even more, A, it's going to hit the intermediate ARM market, which is already, its rates are already up near 15-year mortgage rates anyway. But B, it could push long-term rates, mortgage rates especially, down more, which would help a lot of originators out there. So, it's all a coin toss, right?
So much. I've never seen a time where there's more uncertainty. I mean, there's always uncertainty about what lies ahead with our industry and the broader U.S. economy, but never have I seen a time where people are just so polarly divided on where things are going. You've got the New York Times came out with a piece on their editorial page this week, or yesterday, I'm sorry. It's the title of the piece was "The Housing Market is Bad, but It's Not That Bad." And in the piece, basically, from what's typically a left-leaning newspaper, really goes out of its way to speak to all the strengths in housing right now. And as we've predicted for a year now, values aren't going down as things start to level off a little bit, because people still want houses and delinquencies are low and tons of equity and great employment, and others that listen to the home builders and they're like, it's over, like we're in a housing recession, we're done building, like batten up the hatches. And with the broader U.S. economy as well, Tom, how, like on the business development side, the vendors in our industry, how are they? It's got to be tough to forecast going forward right now if you're like in a high revenue model business. How do you think broadly, Tom, the mortgage lending vendor community looks at the runway this next kind of year and a half here?
Yeah, I mean, they have the pleasure of trying to make sense of all the economic prognostications out there, more specifically to our industry, but you guys alluded more broadly in the greater economy. And you've got to kind of take a long game approach, creating solutions and kind of pricing, staffing, budgeting out for, a longer term viability, knowing that you're not going to make up all the gains in the next 6 months to a year. So I think once the dust settles with the ICE Black Knight acquisition in the early part of next year, I think you're going to see a lot more chips fall out there as, the whole lending community kind of reacts, but more specifically on the vendor side to, okay, who do I need to align with and potentially merge with to stay viable, kind of depending on what that entity looks like on the back end.
That's a great point on the ICE Black Knight thing. There's so much is like hinging on that. If it's lenders that are waiting to make tech decisions or other acquisitions in the industry on the vendor side or the lender side, there's a lot that hinges on that outcome, which is not likely to come anytime soon. I would venture like next spring, right, at the earliest.
Yeah, I mean, those were the kind of initial projections when that announcement came out a few months ago, and haven't heard anything otherwise to change that. Just status quo is to go through the regulatory process.
This is the rundown with Rob and Rich. Got about 5-10 minutes left this week with myself, Rob Krisman, Rob's son Robbie, and Tom Gallucci from TMC. Tom, anything else you're seeing, hearing, feeling out there in the marketplace that would be worthwhile info for our viewers and listeners? And I'll take this opportunity to remind everybody, subscribe to our podcast, TMC Connect, wherever you get your podcast, where most of you listen. And if you're listening now on podcast, join us live on Fridays at 3. Go to mortgagecollaborative.com to sign up for the live broadcast. Rob, you have your hand up.
I do. I have a question for Tom and Robbie. And you were asking Tom about what else is going on in the vendor space. Tom, I have a question that I'm going to ask you in front of everybody, and I want Robbie to weigh in as well. So vendors and lenders, but vendors have X amount of marketing budget, X amount to spend, as do lenders. So here we have, I think it was last year, Anthony Shea, Loan Depot didn't he buy the stadium naming of
The Marlins.
where the Marlins play or something?
Right.
And, G-Rate owns some stadium somewhere.
White Sox.
Yeah, which I would call Comiskey Park, but that aside. So Tom, what do you think that the return on investment is really warranted? What advice would you give to a new vendor or lender starting off? Do you think that they should, start by putting signs on little league home run fences, or I mean, where is the spend? Where should vendors spend their marketing money? And I want Robbie to weigh in terms of, does he, there are companies that all the time sponsor NASCAR cars and NASCAR races and so forth, and the Pepto-Bismol 500 and, Lake Havasu, Arizona, or whatever it is. I'd like to find out, Robbie, your thoughts on, does it make any difference if somebody sponsors it? So Tom?
Yeah, I mean, unless you've got Scrooge McDuck's pool of gold coins to work with, especially in this market, you've got to be a lot more tactful with how you're using your marketing dollars and your spend. So if you think more broadly, it's all about grabbing attention, and Lord knows in the world we live in today, you've got 38 million different distractions out there for your attention. And really, as a marketeer, I'm just trying to get your attention long enough to implant somewhere in the head my company's name or what we do. So you see a lot more focus on getting involved with podcasts like this, and maybe not having the naming rights on a stadium or being the official sponsor of the NFL. or, Deshaun Watson's after hours habits. But you've got to be more diligent than ever in how you are utilizing that dollar out there and what it's going to get you in return. As it relates to conferences in our industry, what's the visibility going to look like for you? You're not in the market to throw money out there just to spend and say, hey, I've got cash to spend here. It needs to come back with a return that draws either clients or potential clients your way.
Robbie?
I'm not sure how my service is right now, but I think through platforms like Salesforce, companies are able to really attribute the impact of their dollar spend and break it out into the returns. So that's gotten a lot more granular and a lot more robust in the way that they're able to track it.
Yeah.
There is so
That's
much.
a great point, Robbie. And yeah, I mean, from the CFO down to different departments, even just in our network, there's a much more tighter focus on, what are we spending and how is it going to project and value our ROI back to us.
Definitely.
I bring it up, Tom, to some extent. Like I said, I was in Florida and I happened to have lunch with a couple people from Finance of America, and they had sponsored a hole in the golf tournament that morning, or golf match, or whatever happens at mortgage events in terms of golf. And I said, so was that worth it? Was that really worth it? Because I think, really, does that money matter? And they said, A, it was only $250. And B, and I hope I'm not stealing Finance of America's trade secrets here, but B, they found the use to them much more. It was much more use to them, much more beneficial, they thought, sponsoring a hole for $250 than paying for an exhibition booth in an exhibition hall with countless other exhibitors. Because they said when the golfers, it was a relatively limited audience, the foursomes would come through, but there was genuine conversation that could take place. And, they were offering water or whatever they were offering, Milky Way bars or whatever, but they gave them a chance to actually engage with those golfers. Whereas in an exhibition hall, typically a lot of lenders are just walking through looking for what kind of good giveaways there are. So that's why.
Right. And then hitting the exit. Right. And Rob, it's a great point too. I mean, you spend that good money to set up ship at a huge exhibit booth, and there's a good chance you're going to be talking to your fellow vendors for the vast majority of the time, where you take that 250 hole sponsor at a golf tournament, get some organic conversation, get a couple pictures for social media with different clients in front of it, and you've made your money's worth and then some.
Yeah. Rich, I hope I just didn't blow a hole in the TMC Chicago sponsorship.
No, it's a good topic, honestly, because I think it's all changing right now. And we have been out in front of this. What people, what the number one thing people want is the lanyard sponsor. Everybody looks at it nonstop. The first time we did a conference, lanyard sponsor, we'll charge like $2,500, gone first. All right, 2-3 conferences in a row. It's the first thing sold. I'm like, charge $20,000 for the lanyard. It's still the first thing sold because everybody looks at it. It's the best, but more broadly, I think that what people will expect out of sponsorship dollars and what they'll want to pay for is going to be much, much more targeted and creative. It's already kind of starting to happen. The days of paying like $20,000 for a lunch or, whatever X for this or that, it has no real teeth to it. It's tough right now. Well,
yeah,
fellas,
speaking of the exhibit booths, that's why we got rid of ours multiple years ago and really focused on just doing more, lightning showcase, as we call them, demonstrations and consumer case studies, where you can kind of evidence what you're doing in front of an audience of lenders. And maybe every so often we throw in a drink ticket or something that incentivizes their participation as well.
Right. And Mike just chatted a great point. There's a fine line between sponsorship, return on equity, and am I getting my money's worth, and supporting the organization, whether it's the Mortgage Collaborative or, your arch rival Lenders One, or, the Florida Association of Mortgage Professionals. So it does, Mike, that's a great point.
Because you're right. The majority of sponsor dollars that are spent, there are little to no expectations for it. It's either you're supporting something or a company or an event or a cause that has been good to you, and it's more about that than it is, But for the companies that are looking for these new companies, especially that gotta, grow customers, there's got to be some teeth to it. So,
Right. And I'd be remiss if I didn't give Mike Cole a shout out for the great support and association from our partnership with MGIC. Appreciate it, Mike.
And we'll be looking for his name on the lanyards, right? In Chicago. Is that the deal?
they were sold months ago. Yeah. So, well, fellas, we're just about out of time. Any big weekend plans? I got high school football, Friday Night Lights, first game of the year for the Twinsburg Tigers. I'll be heading there tonight, and then just chill around the house weekend, get some things done. Any Robbie, you're moving. I mean, that's got to be what do your next few days look like? Just hell,
This
right?
U-Haul truck will soon be empty.
I can't even imagine. Did you like movers in Ohio are ridiculously expensive. In Northern California, what is it like? 30 grand a day, a guy?
I got the old man himself coming up
Oh
tomorrow
man.
to
Wow.
Yeah, I was gonna say, Rob, you gotta have some friends that you can bribe with some light beers and some za, and be good to go.
Right. Few slices of pizza.
I got 4 p.m. tomorrow when Robbie caves and calls 2 men in a truck.
Yeah.
Rob, so you're helping your son move this weekend?
A little bit. I'm gonna play some. I'm gonna have dinner with my daughter tonight in Larkspur, California, and then play some hoops tomorrow morning. And head up and check out his new digs.
Your daughter, the teacher that you broadcast from what cuisine you guys going to get tonight?
We're thinking Thai or Puerto Rican. Does Thai or Puerto Rican any Thai or Puerto Rican influence in Twinsburg, Ohio, Rich?
Yeah, there's actually a really good Thai restaurant in Twinsburg, Ohio. So, but
There you go.
yeah, but not nearly the food diversity of your fine land. So, Tom's building a putting green in his backyard. That thing done yet, Tom? Like a legit putting green in his backyard.
Really?
Yeah.
Legit putting green. Yep. If I'll have to send in some pictures for next week's edition, but it's all done. I'm gonna spend some time on that. I'm a coach a little flag football for my son tomorrow, and I'm actually going to see Rich's alma mater, where my wife teaches at, play tonight. Good old East Lake North Rangers for some Friday Night Lights.
East Lake North Rangers? Really? Is that so, Tom? I'd heard that the East Lake North Rangers actually owned slaves 200 years ago, and there's a huge movement to change their name. Is that true?
No, that's actually their counterpart, the Willoughby South Rebels. But
And since
Yeah.
you're slinging
There you
jabs,
go.
I got my Guardians in first place, the youngest team in baseball, the number 2 minor league system in baseball, one of the lowest payrolls. Tito Francona just getting it done every year on the North Coast. So, ahead of the guaranteed rate field Chicago White Sox in the standings, so in case Tracy King Donadio less is listening. So, anything else anybody has for the group before we bid adieu and call it a weekend?
I'm good.
Robbie, congrats on the new home purchase. All the best with the move, especially since your dad's helping you. And Tom, we should have really had your wife on to get her thoughts on the putting green in the backyard. That would have been some really entertaining radio. So, but we'll see.
oh yeah, she'd have given you some good reaction. I might actually lean on her. I'm gonna air it out here now. I'm accepting bribes for Rich's senior photo from high school for anybody of interest. Hopefully I can
Listen,
track that down.
Especially since I had a legendary mullet, that thing it would only increase the value. Yeah, like Robbie's got the mini mullet going there, the no-cal unkept hairdo look. So that my 17-year-old son
The
is
party in the back.
Yeah. All right, enough madness for the week.
Yep.
Robbie, great seeing you. Tom, always great having you on and chatting. And Rob, always great talking through our crazy business. So to our audience, thanks as always for joining us. We're here every Friday, 3
Fred,
p.m.
happy
Eastern
Friday to you too.
with the rundown, and get us on podcast, on YouTube, and of course live every Friday at 3 p.m. So till next week, have a great weekend, everyone.
See you later.
Take care.